Headlines are screaming that XRP is dead. 6 straight months of losses, a death cross on the chart. The price sitting 62% below the all-time high, but the data is not unanimous, not even close. I spent the last several hours going through institutional flows, on-chain supply metrics, open interest positioning, and the legislative calendar in Washington. What I found does not match the panic. There is a very specific set of things happening underneath the surface right now, and the window to understand it before the market prices it in is measured in days, not weeks, days. Let's break it all down. Start with the death cross, because that is the headline scaring everyone. On XRP's 3-day chart, the short-term moving average just crossed below the long-term moving average. Historically, this specific signal on this specific time frame has preceded drops of 32 to 54%. The current decline from the cross formation point is 19%. If the pattern runs in full, there is a potential 33% of additional downside still unaccounted for. Write these levels down: $1.27 to $1.28. CryptoQuant identifies a dense supply cluster of 19.6 million XRP concentrated in that zone. Think of it as a wall of buyers with orders already placed, the strongest nearby demand floor. If sellers overpower it, the next floors are $1.20 and 96 cents. Those are not guesses. Those are price levels with real supply and demand sitting behind them. But here is what the same death cross data also tells you. Before the 2024 recovery rally, before the run to $3.65 in July 2025, this exact signal appeared on the 3-day chart both times. The cross precedes the pain and then the reversal. Today is April 2nd, 2026. Exactly 1 year ago today, Trump's Liberation Day tariff announcement dropped XRP from $2 to $1.60. April 2025 ended red. That $1.60 level turned out to be the precise bottom of the entire cycle, launching an 82% rally to the all-time high. History does not repeat automatically. But the structural setup is similar enough that dismissing it entirely would be a mistake. XRP may not be in the wrong part of the story. It may be at the very beginning of the most critical part. Let's move from narrative to numbers. 7XRP spot ETFs are currently trading in the United States. For anyone new, an ETF is a product that lets regular investors buy XRP exposure through a standard brokerage account. No crypto wallets, no private keys, real institutions buying through the same platforms they use for Apple stock or government bonds. As of April 1st, these 7 products have locked up 780 million XRP tokens in custody. Combined assets under management, $1.53 billion. Through 6 straight months of declining prices, not one of these products has seen net liquidation. The institutional holders have not broken. That is not panic behavior. That is conviction with real capital behind it. Exchange reserves add another layer. The total XRP sitting on trading platforms available to sell at any moment has fallen from 3.76 billion tokens in October 2025 to 1.67 billion today. A 56% contraction in available sell-side supply in under 6 months. When the pool of supply available to sell shrinks that fast, it takes significantly less buying pressure to move the floor upward. Now add the derivatives picture. This is where it gets precise. Open interest dropped 26% between March 17th and March 23rd, from $976 million down to $724 million, and then rebounded to $753 million as fresh leveraged longs entered. Simultaneously, the funding rate shifted from 0.0015% to 0.008%. New money is going long into the dip, not exiting. That is not a crowd running for the door. That is a different crowd walking in through it. And this week, BitGet Wallet, tens of millions of users globally, integrated the XRP ledger as a payments partner. XRP moved from $1.30 to $1.35 in the hours following that announcement. Real-time price sensitivity to real-world adoption news is confirmed. Now, if I stopped there, you'd think this is the most bullish setup in crypto. I'm not going to do that. Exchange reserves are falling, but if XRP were actually being used to move money, if the payment network were running hot, the supply leaving exchanges would show up as transaction volume on the XRP ledger. It is not showing up. Payment volumes on the XRPL fell 90% from their early February 2026 peak to today, 90%. The network XRP is supposed to power cross-border payments, institutional settlement. The plumbing of global finance is operating at 10% of where it was 2 months ago. Tokens are leaving exchanges and going into wallets and ETF custody, but they are not being used. The supply story is bullish. The utility story is broken. That gap is the central tension in XRP's market right now, and any honest analysis has to hold both of those truths at the same time. Here is the part where reality walks in and punches the bull case in the face. The Federal Reserve has not cut interest rates. Jerome Powell stated publicly that tariff-driven inflation is making cuts harder, not easier, to justify. The CME FedWatch tool prices the first cut in June. Not today, not next month. June. That means tight financial conditions persist for at least 2 more months. XRP's correlation with the S&P 500 is near its highest point in 18 months. When equities sell on tariff news, and they have been selling, XRP follows within hours. It is not behaving as a store of value. It is behaving as a high beta risk asset priced accordingly. The Fear and Greed Index reads 11, extreme fear. On a scale from 0 to 100, 11 is maximum panic. The last 3 times this reached these levels, XRP was within weeks of either a major reversal or a final capitulation leg down. The RSI sits at 42, neutral, not oversold. Classic bounce conditions require a reading below 30. XRP still has technical room to fall before those conditions are met. And with the funding rate now at 0.008%, those freshly entered leverage longs can be liquidated fast if price breaks through $1.28. Now here's the other half of the equation, the part that makes the setup genuinely complicated and genuinely interesting. Ripple CEO Brad Garlinghouse appeared on Fox Business this week and disclosed a number that stopped me mid-sentence. Ripple Treasury, built through the $1 billion acquisition of G Treasury in October 2025, processed $13 trillion in payments in 2025. For reference, the U.S. GDP is $29 trillion. Ripple moved nearly half of that equivalent through its infrastructure in 12 months. 0% moved through XRP or any stablecoin. Every single dollar settled on traditional banking rails, taking 3 to 5 days to clear. Garlinghouse described that gap between the existing infrastructure and what crypto rails can do as the ChatGPT moment for global payments, the point where the technology stops being optional. Deutsche Bank and Société Générale, 2 of Europe's largest banks, have already integrated Ripple's payment stack in early 2026. Both are settling in RLUSD and fiat, not XRP. If the entire $13 trillion migrates to crypto rails but settles in RLUSD, Ripple wins and the XRP token does not. But here is the number the bull case is built on. At just 5% adoption through on-demand liquidity, the Ripple product that uses XRP as a bridge currency, $650 billion per year flows through the token. That is the target. The obstacle between here and there is one piece of legislation. Ripple is a $50 billion company. The technology is deployed at major banks. The $13 trillion pipeline is real, and XRP is trading at $1.35. Fundamentals set the destination. Macro sets the timing. You've just absorbed more real data in 15 minutes than most XRP channels give you in a month. Here is exactly what to watch, 4 specific signals, with dates and numbers attached. Senator Cynthia Lummis confirmed this week that the Senate Banking Committee markup, the key procedural vote, is scheduled for the second half of April. The Senate returns from Easter recess on April 13th. That opens 2 weeks of session time, April 13th and April 20th. Senator Bernie Moreno from Ohio was more direct. If the Clarity Act does not pass by May, digital asset legislation will not move forward for the foreseeable future. Polymarket currently shows 72% probability of this bill becoming law in 2026. Watch for the Banking Committee vote date announcement. That announcement alone will move XRP before the vote even happens. The 19.6 million XRP cluster at $1.27 to $1.28 is the first real demand wall. But the price level alone is not the signal. Watch what happens to CryptoQuant's exchange reserve metric as price approaches that zone. Reserves continuing to fall as price drops means buyers are absorbing supply, the floor is holding. Reserves spiking upward as price nears support means tokens are returning to exchanges. Sellers are mobilizing. The direction of that metric at that price level is more important than the price itself. And remember, a breach of 128 triggers forced liquidation of freshly entered leveraged longs at the current funding rate. That cascade can be fast. Every technical analyst currently covering XRP has the same trigger, a sustained daily close above $1.50. Not a wick, not an intraday breach, a close. 6 consecutive rally attempts over the past 6 weeks have been stopped in the 145 to 150 zone. Midterm holders who bought during the slide from $3 are selling back at cost basis. A confirmed close above 150 breaks that overhead structure and opens the path to 165 and 180. The first rate cut is priced for June, but that can shift fast. Watch the CME Fed Watch tool. If June cut probability moves above 60%, or if tomorrow's March Fed minutes reveal softening language on inflation and tariffs, financial conditions are loosening ahead of schedule. That directly reduces the macro headwind pressing down on every risk asset, including XRP. This is the trigger that changes the timeline, not just the price level. Bull case, Senator Lummis delivers. The Banking Committee votes in late April. The Clarity Act passes the full Senate in May and gets signed into law. U.S. banks receive federal legal clarity to run on-demand liquidity corridors using XRP directly. At 5% adoption of Ripple Treasuries, $13 trillion, that is $650 billion per year flowing through XRP. Ryan Lee, Chief Research Officer at BitGet Research, projects a price target of $2.20 to $2.50 under that regulatory scenario. Bear case, tariff pressure deepens through Q2. The stock market extends its decline. The Clarity Act stalls again on DeFi provisions or ethics language tied to Trump's personal crypto holdings, and XRP stays range-bound between $1.20 and $1.50 through the summer, while midterm holders continue quietly reducing positions and the HODL Waves cohort that peaked at 23.5% of supply on March 27th continues its decline. You don't need to guess, you just need to watch these 4 signals. So let me bring this all together. XRP at $1.35, death cross on the chart, macro tight, fear and greed at 11, and underneath all of it, 780 million tokens locked in ETF custody, exchange supply down 56% in 6 months, $13 trillion in Ripple infrastructure that has touched 0% crypto, and a Senate vote window that opens in 11 days and closes in 6 weeks. I'll be covering every development, the Banking Committee calendar, the Fed minutes, the ETF flow data, every single day on this channel. Tomorrow, the Federal Reserve publishes the minutes from the March meeting. Inside those minutes is exact language on inflation and tariffs that determines how long the macro headwind stays in place. I'll have the numbers, I'll have the full breakdown, don't miss it. The next move starts with one of those 4 signals. Watch them like a hawk. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.